Well, thank you for joining us. I'm Marlon Bowling, your tour guide to the ag commodity trade. Happy Friday to you, my goodness. It's nice to be back with you here, and I want to give a special shout out to everybody that I had a chance to visit with at the National Farm Machinery Show in Louisville. Oh my gosh, that was a lot of fun. And I had so many folks come up and shake our hand and tell us how much they appreciate our network. And man, that was very much appreciated. So thanks to everybody that we had a chance to see at the Farm Machinery Show in Louisville. That was a lot of fun. And I hope if you haven't had a chance to go to that event that you get to in the future. That is a great one. Now, let's take a look at the setup for today's trade here on a Friday, and welcome aboard Brian Hoops. And he is the president of Midwest Market Solutions. He joins us right now. Brian, this is an interesting segment that we had in the overnight trade. Every time I checked the markets between last evening and the middle of the night and then this morning when I got up to come to work, it's like they were just kind of playing a little shell game. Everything was just kind of moving around a little bit. I don't know if they accomplished a whole lot, but we ended up that Globex trade a little mixed. I would like to take a look at the corn market here and see just how we are this morning. So bear with me here for a second. Let's take a look at that corn board. And right now we are 3/4 higher this morning on the March at 676 3/4. But December is down a half cent at 593 here this morning. So that'll give you an idea of the mixed up action. Soybeans, the nearby March, 3.5 cents higher overnight at 15.30. And we had that July contract up by 2.5 cents. And on these quotes provided by Bar Chart, you had November trading 1.25 higher is all. It was at 13.85 in the morning trade. Then if we talk about the wheat market overnight, we start with Chicago. March was down a couple of cents at 7.63. And July new crop down just a penny. So not much action there either. Kansas City, it went the other direction by about that much. March was up 1.25 at 8.99 3/4. Can't get any closer to $9 than that. It did get up above it overnight, but it fell back below by the time we wrapped things up. On July, just a penny higher overnight in Minneapolis. You had March going down 1.25 at 9.29, and July was down 0.5 cents. I want to check out the cotton too while we're here. Let's take a look at the March, down 63 points, and December was down 79. Brian, I understand we had a little bit of overnight export sales activity. What did we hear this morning from USDA?
Yeah, welcome back, Marlon. We've had a corn sale earlier this week, a soybean sale this week, and now we had another corn sale, this time to that famous unknown destination category, about 120,000 metric tons. So a couple cargoes. Trade will consider it just a routine business. But the fact that it's unknown instead of being designated as Mexico or South Korea really leads the trade to believe it's going to end up being China, which, of course, if that's the case, China's been a very minimal buyer of U.S. corn products this year. So that could be a potentially friendly development. So I think the trade is not going to look at this just as kind of a routine business, even though it really was. But the fact that it could end up being China, it could be kind of friendly here for this corn market. So we continue to see the inverted structure of this corn market, front months being much higher than what you could sell corn for in May or July, for example, which tends to be somewhat bullish in and of itself. Our exports have started to slowly improve a little bit. If we could get a little bit more feed demand, ethanol demand, we could see this market trend higher into the early spring timeframe, into that planting timeframe where we try to secure enough acres to meet the demand. So the expectations are we'll have more acres, but now the market kind of has to make sure that expectation comes true. And so we've been really range bound in this corn market for quite some time, several weeks now. And it's at some point, I think we start to nudge up till that top end of that range and try and leak above it as we go into that spring time frame.
Yeah, we do have that big Ag Outlook Forum coming up in just a number of days. So maybe we'll figure out what people are thinking about for acreage, at least from that standpoint here within the next week or so. We'll pause right here. And Brian, we had some big moves in the outside markets overnight. We'll talk about that and its potential impact on the ag trade. That's coming up next. All right, we're talking with Brian Hoops of Midwest Market Solutions. Brian, you bring up a good point. We were just chatting during the break here about different things affecting the markets. And again, we have a bit of a problem with the Commitment of Traders report, right?
Yeah, absolutely. So this will be the third week in a row that we've had no commitment to traders after the close on Friday. And, this is a very key report that's done every week from the standpoint that we understand what position the commercials are in, the large fund traders, what positions they're holding. And, the strength of the wheat market has really come from the fund short covering, about $1 rally in that wheat market over the last month. And so it's important to have that information so we know where these funds and the commercials are standing in relation to these markets. It's also a 3-day weekend coming up. And as we come back from Monday, no trade during the day, trade Monday evening in the grains. Livestock begins Tuesday morning at 8:30 Central Time. And speaking of things that we haven't had for some time, we haven't had any trading in the southern plains and the cash cattle. Now this could be the third, fourth week in a row when trade resumes on a Friday, and it could again be after the close.
They can't do that forever, right?
They used to do it, and then we kind of got into the, last year it was mostly in the middle of the week, Wednesday, Thursday, it was all wrapped up, and now it seems like we're reverting back to that trade in the Southern Plains late on a Friday, and I don't really have an explanation of why that's happening. Trade in the north did occur yesterday, steady to $2 higher. So we had dress trade up in that 254 range, a pretty good number. We're just waiting for that southern trade to develop. But a lot of the futures markets have kind of dialed in this week's trade already with a big rally early in the week. Now we're looking ahead to next week, and there's some talk that maybe feedlots are going to just move these cattle because of the snowstorm that has come through the plains. Going to leave really muddy conditions. They may want to move some of these cattle rather than fight some of the mud.
That's a good point. All right, so let's review the market prices then. On the close yesterday, we did have the live cattle trade mainly lower. April was down 52 cents at 164.07. That'll be the starting point here for today. Over on the feeders, we had April down 55 cents yesterday at 190.60. And then on the lean hogs, well, our starting point today will be that April, which was 72 lower yesterday at 85.77. Brian, thanks for explaining all that stuff this morning. Very busy morning for you. Appreciate that. Brian Hoops of Midwest Market Solutions.